to get you all alone. Once I'm in, there ain't no letting go. My mind games until you lose control.
Ladies and gentlemen, what's up? What's going on, traders? Welcome back and happy, wait for it, hump day! My freaking favorite day of the week. I don't know why, but I love hump days. Probably because I get to come in and just scream hump day at the top of my lungs, upset my wife. She's over here like, oh, here we go. It's freaking Wednesday again. Get ready for the hump day. But I love hump day. It's a profitable day. It's a fun day. It's a jam-packed day. And I just absolutely love it. So again, good morning. Happy hump day. It is Wednesday, October 11th, 2023, 8:33 in the morning. And we are officially diving into the pre-market rundown where we get you guys prepared for the day. My overview, my outlook, my analysis and game plans on the SPY, the Qs, my top penny stocks and option plays for today. So again, you guys can come in confidently, strategically, navigate the market, and put the odds in your favor of success. And that's exactly what we did yesterday. We came in, we assessed the market and said, you know what, we're not shorting the market today. I know how tempting it is to short this market. You want to get into the short side, but don't be the guinea pig. Buy the pullbacks, buy the breaks out of consolidation, play the market higher. And that's what we did yesterday. We got you guys prepared. You came in strategically confident and traded the market the right way. You were on the right side of the movement yesterday. And that's what we're going to do again today. Right, get you guys prepared, talk about what we have going on. We just had PPI data drop, and that's definitely some data that can move the market, and that's going to help us really get everything fine-tuned, dialed in, get prepared, and get ready to attack this market here at 9:30, right? So let's dive into it, but before we do that, hit me with a big old Alpha Day Trading good morning. If you are inside of the community right now, hit me with a big old good morning. And if you guys are over on YouTube, hit me with a big old good morning as well, and then drop your location. Where are you guys tuning in from right now at this point in time? Hello from sunny, beautiful 75 degrees, Tampa Bay, Florida. It's absolutely amazing here. Loving the weather. But hit me with a big old good morning. Where are you guys tuning in from? And then if you are inside of chat, hit your boy with a big old good morning as well. Who do we got inside of chat this morning? We got Joey. We got Mr. Corey, Jonathan, Kevin, Steve, the Sizzler, Trader Adam, what's up, boss? You had Catherine in here this morning, Steve Carby, Early Bird getting the warm. I see Profits chat's already dinging. Here we go. Look at that. Another scalp on TPST. Let's go. You got $1,120 on TPST. Well done. And that was something that we were discussing this morning, right? TPST on high watch for the $1 dip buy opportunity. Room back to those pre-market highs, then 140. I was in that trade for 30 minutes. And that's why I was like, well, that was lame. Does nothing for 30 minutes. I cut the trade because I have to start doing other things to get the stream ready to go. And then boom, it went up like 20, 30%. And I'm like, that would have been my one and done trade. I made a whopping $180 on that trade. And the potential for that trade was like a couple grand. So I'm really happy that someone caught it because your boy got 180 out of it and I held the thing for like 30 freaking minutes. That was lame. We got Rayo, $1,120. That's absolutely insane. Do me a favor though, boss. When you're typing in those tickers, right? When you're typing in those tickers, just type it in a $sign because that's going to allow the chat to function correctly. Again, when like you hover over the ticker, you get your interactive chart. When you go to search for tickers, it's all based on being in correct ticker format. So do me a huge favor, everybody inside of chat. Always make sure you're putting in the tickers in correct ticker format. I would greatly appreciate you guys. But other than that, good morning, everybody. Stir, what's up? Cole, Joey, we are ready to rock and roll. We're going to have an amazing day. And what's today? Today's day number 8 of October. And so far, we've been absolutely on fire so far for the month of October. And we are going to have another amazing day today. You guys are on YouTube. What's up? Who do we got over on YouTube? CVO Crypto. What's up, brother, man? How you doing? Tom, 360 Crypto Farming. Scott, what's up? Craig, Dan, Brent Miller. We got some Brents in the house today. Some Scotts. Todd, what's up? Prod Cycle, good morning. Dan, anyone, good morning as well. And before we officially dive into it, let's just go ahead and do a quick little audio check. Let's just do a quick little mic check, video check. Make sure we're all good. Give me a thumbs up, and we'll officially dive into it here in a moment. We'll talk about the SPY, the Qs. We'll discuss PPI data that just dropped, get y'all prepared for the day. And again, we'll come in strategically, wait for the best opportunities to come to us, and we will put the odds in our favor of making some money today, guys. But again, give me a quick little audio check. Let's make sure we are all set, ready to rock and roll. Scott, pretty good? Nice. Nice. Where'd TPST end up going? Yeah, it ended up getting back to those pre-market highs, didn't it? Wah, wah, wah. Literally. Had a solid position on this stock. Had 2 to 3 cents of risk, just waiting for that push back up into the 120s, and I cut it at like 103, 104. I was like, it's not doing anything. This thing is lame. It's literally just sitting here sideways. And I sat through all of this stupidity. And it was boring. It was annoying. I was like way past my average time horizon for a trade. I was in the trade for like 30 minutes. And I'm like, I'm getting out. It's not holding $1 and bouncing big. The second I cut it right here, it ripped all the way up to those pre-market highs. So that was fantastic. If you guys are wondering, like, man, that thing was choppy, those are just what we call misprints, right? These are misprints that just cause the candles to look all funky. That's not legit. But overall, this thing held beautifully. Held that dollar, grinding on up. We're trading at 125. Still going to be on watch today. Looking pretty good on the audio. Fantastic. All right, guys. Well, that's besides the point. We'll get over to TPST here in a moment. But all of you are really focused on what's going on with the SPY. What's going on with the Qs? What can we expect here today? So first things first, let's go right into the economic calendar today, and let's review PPI data that just dropped, okay? And that's one key piece of data that we had dropping today. Here this morning, 8:30, okay? Then we do have more data dropping here this afternoon, guys, right? Here at 2 o'clock, we do have FOMC minutes dropping. That's definitely something that's going to move the market, guys. 100%. So if you're in the market around 2 o'clock, be mindful of that 2 o'clock time, right? What you can do just right now is take a line tool, go over to 1400, that's 2 o'clock, and just mark it up with a blue line, gray line, whatever color line you want, but mark that time up on your chart. So you know, as we get close to this blue line, you got to be mindful that if you're in a trade, if you're aggressive, if you're heavy, you got to flatten that position, scale back a little bit, hard stop in the system, because we do have FOMC minutes dropping here at 2 p.m. today, and that's definitely data that will move the market, guys. So mark that up, be very mindful. But we just had PPI data drop. Market is already reacting to PPI data. Let's go ahead and take a look at it. First, we'll start with PPI month over month. Then we'll go PPI year over year. Then we'll discuss core PPI as well. So PPI data month over month. We came in slightly higher than the forecast. Previous read was 0.7%. We were forecasting 0.3%. We actually came in about 0.2% higher. We came in at 0.5%. But check out this PPI year over year. Okay, our previous read, 2%. We came in higher than the previous read last month. We came in at 2.2%. We were forecasting to come in lower at 1.6%, but again, we came up about 0.6% higher than even our forecast. So we came in a little bit hotter than expected there, PPI month over month. But then we got to go take a look at core PPI. It's going to strip out those volatile things. Housing, energy, fuel. It strips that out and gives us a little bit of a better read. Okay, so let's look at core PPI month over month. We were forecasting to come in at 0.2%, which was the previous month read as well. We came in a little bit higher, 0.1% higher here on the core PPI month over month. We came in at 0.3%. Let's go look at core PPI year over year. We came in at 2.7%, which was higher than the forecast and then higher than the previous read as well. So we came in hotter than expected. Not extremely hot, but we came in slightly hotter than expected. Market is reacting slightly negatively, right? We just came off this area of resistance, 436, and we've already seen about $1 pullback in just the last 11 minutes since that data dropped. Okay, so with that being said, data dropped. Fantastic. We have more key data dropping tomorrow. Okay, what usually follows PPI data? CPI data follows PPI data. So tomorrow we have another jam-packed day full of data. We got initial jobless claims before the market opens. We have core inflation and CPI data dropping tomorrow. Okay, that's Thursday. Then come Friday, you have Michigan consumer sentiment data at 10 a.m., and that's definitely data that will move the market. So you still got some key important data dropping here. Again, later today at 2 p.m., tomorrow morning, you have CPI data, and then coming into Friday, even after market opens at 10 a.m., you do have more data dropping, Michigan consumer sentiment, and that's definitely data that will move the market. So with that being said, let's go right into the technicals. Let's talk about what we have going on, where the best of the best of the best opportunity is for today. Okay, so number one, here's what I want to do is I want to go ahead and identify this gap with you guys. I'm going to take this fib away. But I want you guys to all have this gap level, pretty much marked up and identified on your charts, okay? So you have this low of day on September 20th, then you gap down on September 21st and put in a high of day. Mark up the low of day prior to the gap down, and then mark up the gap down high of day. And then I usually shade it with a rectangle so I can clearly see this is a daily gap level, right? And so that's an area that we need to be mindful of, because the gap down high a day is respected as resistance. If we break above it and hold above it intraday, we typically run up and fill these gaps into the low of day prior to that gap down high a day, which again is another area of resistance. I love trading gaps. We have daily gap fill opportunities. We have daily gap fill rejections, right? These are great key levels of support resistance to be basing intraday trades off of. So go ahead and identify that gap, mark it up, and get it on your chart. Okay, that gap zone is between 435.97 and 438.45. That is your daily gap. Okay, next area that I want you guys marking up is going to be this zone right here. And we could probably bring it up a tick. We can bring it up a smidge. It's going to be this zone between 432.53 and 433. Okay, a couple areas that really stand out to me about this zone. It was this gap down low of day before that big push. Okay, we also see that it was Monday's high of day. It was yesterday's low of day. It was yesterday's open, and it's sitting right at the 20 EMA. That gives us 1, 2, 3, 4, 5 valid points that really makes this a high probability area of potential support today. It's a key zone based on how many points and how many significant points we have at that zone. All right, so again, that zone is going to be between 432.53 and 433.01. Okay, we know where we have some overhead resistance, those gap levels. Those are the first two areas to really just start with, in my opinion, right? Start with those two levels. Let's go right into the 5-minute time frame, and let's see what we have going on. Well, what did we see yesterday? We saw the SPY break over and enter the gap zone, but shortly later fell right back outside of it. This morning in pre-market, grinding on up. Where to? The lower end of that daily gap. We tried to break it, but we couldn't. We tap, and now we're starting to pull back off not so great PPI data. So here's going to be my game plan. And it all comes down to this one level of resistance. Okay, this is your line in the sand for the day. Your line in the sand for the day is that 435.97. And what is 435.97? That is the gap down high a day. That is my line in the sand. That's going to be an area that I'm basing a trade off of today if we set up at that level of resistance. Okay, so there's a couple of different ways we can play this. Okay, number one, if we continue to hit that level and we fail to get above it and we start to roll on over, I'm absolutely playing puts on back down into these lows from yesterday. That's a key level of resistance, guys. If we can't break above it, we are going to see the market most likely roll on over and pull back. Where to? Again, into these lows here from yesterday. That would be your first target. Then where to? That lower daily zone of support between 432.53 and 433.01. That lower zone would be one of your main targets today. That could potentially give you about a 3 to a 3.5 point drop to the downside today if we fail to break above, stay above, and trade above that 435.97. Again, that's my line in the sand. That's the make or break for me. So trade plan number one is if we cannot break that level and we top out, I'm getting short for the drop on off today, okay? However, you always need to have an opposite plan in place just in case. Because what if the SPY does break above that 435.97 and it re-enters that daily gap zone and we see the lower end of that daily gap zone now truly holding as support? Well, that's an intraday break of resistance and a retest of support. Okay, it's also a key level of resistance that could turn into key support, puts us inside of this daily gap zone, and we know price can move quickly through these daily gap zones, and we could fill these daily gaps. So that would be trade idea and trade plan number two, is if we see a break and hold above 435.97, I would look to place SPY calls all the way up to close that daily gap right around 438.45 here on the SPY, guys. So today's a simple day. I love it, right? You got two key areas to go ahead and mark on up, have on your charts, right? You just got to wait for the SPY to come up to this 435.97 and make a decision. That's really all you have to do. Let it come up to that level and let it make a decision. Is it going to get above that level and stay above that level? If so, I am looking to play calls. If we come up to that level and tap it, can't break above, sellers are here, right? And we start to see that nice curl and we're starting to roll on over, looking pretty weak, looking pretty bearish. At that point in time, I will be looking to trade puts for the next leg down. So again, my line in the sand, the make or break, in my opinion, for today on the spot. And again, my line in the sands are usually pretty spot on 80% of the time. My line in the sand today, 435.97. Okay? Do we have any questions whatsoever about the SPY? Any questions about the gap level, lower support, why my line in the sand is my line in the sand? Do we have any questions at all before we go ahead and dive into the cues here? Yep, so again, daily gap is between 435.97 and 438.45. That is your daily gap. Now, we can continue to do more analysis, right? We could probably come in here and grab a Fibonacci extension, go find the last swing high, swing low. We can grab an extension off those two levels and see, hey, we're also sitting under the 50% extension. That's right in line with that 435.97 level. So we can start adding extra layers of confluence. Not only do we have that gap down high a day at 435.97, that's going to be an area of resistance. It's right in line with your 50% extension from swing high to swing low. So that can give us an extra layer of confluence, a separate reason to be looking for a short if we do top on out and fail to break above that 435.97. But just as a standalone, looking at that gap level, I trade gaps by themselves, right? Gaps get filled 80% of the time. And when they get filled, they like to hit those levels to the penny. I mean, how many times have you seen a gap get filled from penny to penny? It's sexy. It's beautiful. It's so fun to trade because it's so easy to trade gaps. And it just comes down to being patient and waiting for one of two things to happen. Hit the lower part of that gap level, fill the break above, you get short. Break above that lower gap level, enter the gap zone, stay above it, stay inside of it, play it long to close the daily gap, right? And again, we had QQQ filling a gap last week. I mean, this would be a really, really great example of the Qs and the daily gap. So let's go ahead and take a look at QQQ from last week, right? Was it last week? It was last week. And you kind of tried to fill it again here on Monday, but it was technically filled on Friday. But we had the Qs identified for a daily gap between 362.63 and 364.49. We had this daily gap identified. Friday, we closed that daily gap. So if you go back and take a look at Friday, look at what we did Friday. I know we kind of chopped around a little bit, but eventually we had a solid gap fill trade where we broke through that level, held it, and then we pushed all the way up and we closed that daily gap. Okay, yeah, we did kind of chop around that level a little bit on Friday, but eventually you had a solid break, retest, you had some nice follow through, you closed the gap. And that's just one example, and that's a subpar example of a gap fill. I can go back and look at tons of opportunities, tons of trades that we've taken for daily gap fills and just how accurate it is. You guys remember last Friday on Tesla for the daily gap fill rejection? I gave that trade plan to you guys, right? We had this daily gap, right? We were looking for a daily gap fill rejection to play the market short, right? And it did exactly that. Came up, filled the gap. 2 days later, the thing was down 10 points, and all we were doing was waiting for a daily gap fill rejection. We came in, entered the gap zone, we filled the daily gap, we got rejected, we dumped down 10 points over the course of 48 hours. And a lot of you guys took that trade. A lot of you guys made some banging profits. I love trading gaps. And so since we're so close to this daily gap here on the SPY, I'm putting a lot of emphasis on this daily gap. And that's why it's my line in the sand. That's why it's my make or break. That's why I believe something's bound to happen at this gap level, whether it's to the long side, the short side. We have yet to make that determination and come to that conclusion. But if we do something at or near that gap level, we have great opportunity. Got at least 2 points to the upside. Got at least 2 to 3 points of potential to the downside here on the SPY. Okay. So again, do we have any questions at all regarding the analysis on the SPY, my game plan, my outlook, my reasoning, the line in the sand? Do we have any questions before we move on to QQQ? Bueller? Nope. All right, well, if I start moving on and then someone goes, yeah, let me get those levels again, I'm going to punch you in the face. I won't do that to you, but yes, I will. I'll punch you in the face. Give me 1 second. Okay, I'm back. All right, so let's dive into the Qs. If someone comes in and goes, what's your analysis on the SPY? I will find you, figure out what kind of car you drive. I'll get my pocket knife, and you'll be out $1,000 in new tires. So let's take a look at the Qs and get some analysis going here, guys. So here's the first thing I want to do. Grab a fib extension from the swing high to the swing low. Drag it on back up to that swing high. And we can see here that yesterday we came pretty much up to the 23.6 extension. That was our high day from yesterday, and we got rejected. So we know right around yesterday's high a day was the top end of this fib extension. So typically the way we use Fibonacci extensions is if we're going to see a retracement, we don't want to see it go above the top end of that extension, the 23.6. That would be the high where you top out and then possibly start to see that next leg down. So just go ahead and utilize this extension and reference your 23.6 level. That's going to be right around 371.90. That's the price, 371.90. But here's what I want to do is I want to have multiple layers of confluence, multiple things that stand out to me that suggests we can see maybe a drop on off today. Maybe we hold below the 23.6. Maybe that is resistance and we start the fade and fall. Is there anything else that we notice here on the Qs that really allows us to establish those multiple separate reasons to take a trade today? So the first thing that I'm going to do is I'm going to mark up this pretty obvious zone of resistance here on the Qs. And I mean, it is pretty obvious to me. We have this big run up high a day. We turn resistance, turn support, turn support, turn support. Back here, hits it as support again, support. Then we hit it as resistance, hit it as resistance again. Would you look at that? Just so happened to be yesterday's high a day as well. Fantastic. Oh, would you look at that? Just so happens to be right around the same area as that 23.6 extension. So now that's giving us two potential areas of key resistance that we could be looking to play puts off of today. Yesterday's high a day. Okay. Also, some key significant daily resistance and support from the past. We see it hit that level maybe 5 to 10 times. And it's a 23.6 retracement. And so if for some reason we do stay below those two areas today, that could be the indication we need to start to see a slight pullback in the next leg on down. Okay. So let's go ahead and now dive right into our daily time frame. And I am going to literally flip shit. And here's why I'm going to flip shit right now. This was my freaking trade of the day, and I made 180 bucks on it. This is lame. This sucks. I'm joking, it doesn't suck. But this is insane. This was the only trade that I even talked about this morning. High watch, dollar entries, and this thing is up freaking 100%. It can be very frustrating at times when you close a trade because you have other things going on, and the thing absolutely soars 100% from a perfect entry, and you got a whopping $100 out of it. Boo. Anyway, guys, great trade. If you guys took it at $1, congrats. It looks like we did have one member take that. 1,100 bucks. Early birds getting the worm. Well done. Well done. Anyway, back over to the Qs, getting a little sidetracked. I just saw the level 2. It said it was at $2, and I'm like, you got to be joking right now. But it happens to the best of us. Qs. So again, guys, this is what I'm looking at, right? We have that key zone of overhead resistance. We just identified it on the daily, okay? It's also the 23.6 extension, right around 371.77. So this is my line in the sand area here on QQQ today. Is going to be this overhead zone of resistance between 371.30 and 371.77. It's also that daily 23.6 extension. So that gives us a couple separate areas of daily significant resistance that we could be looking to trade off of here intraday when the market opens, okay? Now, if we are able to break above that zone, okay, and we're able to hold that zone as support, then I would actually be looking to play some calls into this daily downtrend here on the Qs. And that's going to be the next overhead area of resistance that I see on the Qs by the end of this week, right? If we see the Qs getting above, right, that zone of resistance, and we see it turning into support here intraday, that's also breaking above the 23.6 extension. At that point in time, I would invalidate that extension. And to me, that would suggest we have a little bit more room to the upside. Where to? In the 373s, right? Somewhere in the 373s, basically on up into this multi-month downtrend here on QQQ. That's the next area that I believe we can stop and start to see a short-term pullback. But that's only if we break above, hold above, and we trade above this zone of current resistance between 371.30 and 371.77. So here's the deal. If the SPY enters the gap zone, stays in the gap zone, and we start filling the gap today, what do you think is going to happen with the Qs? QQQ is most likely going to be getting above and holding above this overhead zone of resistance. It's most likely going to turn into support. We would have potential to play QQQ long into that multi-month downtrend. That puts you right in the middle of the 373s. Right around like 373.50-ish would be that multi-month downtrend here on QQQ, okay? So you have my line in the sand on the Qs, the make or break, right? You have my line in the sand here on the SPY, my make or break. And here's one thing that I want to hit on real quick before we move forward. is it always comes down to like location. I'm a big person when it comes down to the location of the stock, how it's developing, how it's moving. And some days I come in and I'm like, I don't like the Qs, I like the SPY. Some days I come in, I'm like, I like the Qs better than the SPY today. Some days I like them both. Some days I don't like them at all. I always try and make that assessment based on location, how we're moving, areas of support resistance, and try to come to the conclusion of, do I see better potential and easy trading with the SPY or better potential and easier trading with the Qs? Today's the SPY, right? Monday was QQQ. Yesterday was the SPY. Today, I see better potential with the SPY. Why is that? Because the SPY daily looks a lot better to me, right? Getting inside of that daily gap zone and filling the daily gap looks great. That seems super simple. I love trading these types of setups. Look at the Qs. Is there a daily gap? No. Does it look as good to me as the SPY on the daily? Not really. Intraday, are we sitting right at that level, at a make or break line in the sand, making a decision? Not really. The SPY, are we right at this level, right before market open? Yes. Is that a make or break line in the sand level for me? Yes. Do I believe something's going to take place at this lower level to provide me with a trading opportunity? Yes. The Qs still got a little bit more work to do, basically. A little bit more time to go, a little bit more work to do before it even confirms and validates a trade. I look at the SPY, I believe right at 9:30, I could be seeing a trade validate itself. So based on those reasons, I'm actually going to be watching the SPY over the Qs today and put 80% of my focus here on the SPY. Okay, but back to the Qs. Do we have any questions regarding the Qs, the analysis, the outlook, the line in the sand? Do we have any questions whatsoever regarding QQQ before we move on to a couple of my option plays for today? If you guys want to see the charts, the screen, get the analysis, come over to YouTube. Join the pre-market rundown show. Links are in the bio. They're on TikTok. Come over to YouTube and join us on our live session. Yeah, and I was actually in TPST this morning at $1. I had 5,000 shares, not a big position, at $1. My risk initially was under 95 cents. My risk on the trade was literally, what, 250 bucks. And I had target up at 140. The potential on that trade was a couple grand, right? The risk reward on that trade was exceptional. And it worked out beautifully. But 8 o'clock hit, I start getting the live streams going, start making sure that the team's prepared for the day. And I'm like, I can't manage the trade properly. If I'm not focused on the trade, if I can't manage the trade, it's pre-market. I can't put a stop loss in. I have to close it. Literally, the second I closed it, it ran up 20, 30 cents. I'm like, that's just my luck. But again, if you guys grabbed it, you grabbed it. It's amazing stuff. So no questions regarding the Qs. You guys are a chatty bunch today. You guys are really hyped up and engaging and just really excited today. I freaking love this high level of engagement inside of the community. It's absolutely amazing. So keep it up, guys. I mean, you guys are just rowdy today. Woo! Phew, freaking awesome stuff, guys. I love it. Let's go ahead and dive right into Tesla. Okay, a couple things that I see on Tesla, guys, is I'm actually looking for a possible short, maybe possible short at some point over the next day or two, up towards around like 269. And there's a couple reasons for that. Number one, take a Fibonacci extension from the swing high to the swing low, back up to the swing high, and you see that yesterday's high a day was right off that 23.6 extension. That's an area of resistance. That was yesterday's high a day. So that gives you one potential area of resistance, the 23.6 extension, number one. Number two, it was yesterday's high a day. Look left. Is that a valid point? Well, I would say so. Right, we had some support right here, then it turned into a crap ton of resistance, and you see it respected here and here as well. Oh, surprisingly enough, that was yesterday's high a day. Well, that's an area of resistance, a prior day high a day, right? It's in line, and it has multiple touch points at that zone. So now I'm validating that this is a key zone of resistance and a key zone of daily resistance. It's also the 23.6 extension, and that's the highest I would want to see the stock go if I'm looking to short for the next leg down, is a 23.6 retracement, okay? And then finally, my fourth and final reason is we would be coming into this multi-month downtrend here on Tesla. You have 4 valid points, all at the same price. You got your fib extension, yesterday's high a day, daily resistance, multi-month trend line, all falling right around this 269 price point here on Tesla. And so I like it for that reason. If we can come up and stay below this zone of resistance, that's between 268.10 and 269, stay below that multi-month downtrend, stay below yesterday's high a day and that daily zone of resistance, and we see great intraday price action, we're topping on out and appears to be rolling on over, I would love to get short on Tesla somewhere around the 269s, maybe right around 270. If we do push up a little bit higher, I would even consider entries up around 270. Why is that? 270 is a psychological level of resistance. Now that gives us 5 potential reasons to get short. So again, I have my zones identified. I just have to wait for Tesla to open and possibly come up into that zone today, top out, start to roll on over. And this would be a great day trade opportunity that would absolutely turn into a swing trade. So I would be taking Tesla puts on my Roth going 45 days out. I'll probably take half my position if the trade works out intraday, lock in those day trade profits, and then hold the rest for the next week or two and see if we do end up dropping lower and starting to see that nice little pullback there on Tesla, guys. Okay? So those are all of our daily key levels, and we can clearly see that we have a lot of overhead resistance on Tesla. And so there's another thing I want to point out. Is we have this multi-day uptrend. Just go back into Monday's low of day, connect it to yesterday's low of day. We do have this multi-day uptrend here on Tesla. So there's a couple of different ways that we could actually play this. We could play this long into all of this resistance and then start looking for the puts. So if we come back down into this trend line, that would be point number 3. If we come back into the trend line, right? We have Monday's low of day. We push on up into the open yesterday, we shoot straight on up. That validates 2 points. If we see Tesla come back down and hit this trend line and balance on point 3, I would take it long. Where to? Yesterday's high day. Where to? That multi-month downturn we just discussed. Where to? That 23.6 extension. Where to? That zone of resistance, right? That could give us a nice intraday day trade up into all of that overhead resistance. Why not take advantage of it? Right? If I want to get short up around that level, I think we could push up into that level. But I'm not just going to get long. There has to be a reason. What's the reason? Point 3 of this uptrend, and it's a multi-day uptrend as well. Carries more weight, and it's more valid than just an intraday uptrend. So that's what I'm looking at here on Tesla, is we may have a trade right at the start of the day, guys. Right? If we see Tesla open, come back down into this trend line, and we see it hold and we see it bounce, I'm absolutely playing Tesla calls back up between 268 up towards around the highest 270. That's where I'm getting out of the calls. And then patiently waiting to see if there's a reason to get short here on Tesla. If we come on up into that multi-month downtrend and stay below it, if we stay below the 23.6 extension, if we stay below yesterday's high day, right? If we stay below that daily zone of resistance and we hit top, and we're failing to break above, at some point, what could we see? We could see that multi-day uptrend do what? Crack. We would be going from the bullish side to the bearish side. So now you're pairing an intraday, multi-day uptrend with these daily levels of overhead resistance. Now you're building a quality, solid, high probability trade plan. We can see we have opportunity to the long side, maybe 5 points. And then we have to sit back, be disciplined, be patient. But if we hit all 4 or 5 of those daily key levels, resistance, top out, start rolling on over, and then if we start cracking this multi-day uptrend, that's an 80-20 setup all freaking day. Like, I'm jumping into the short trade. We have a lot of great potential back down into the low 260s. So I'm liking Tesla. I'm sure you guys can see what I see. You're probably liking it as well. A lot of separate reasons to be looking at Tesla today, to the long side and to the short side for a day trade and even for a potential multi-week swing trade to the short side here on Tesla. I mean, just so many separate valid reasons of, potential here on Tesla at the end of the day, guys. All right, so that's my analysis on Tesla. Tesla looks great. Tesla is taking the taken priority on the watch list, right? Out of every stock that I see potential with, Netflix, Amazon, Apple, Tesla goes right to the top. Tesla looks great. Want to keep this one on high watch. I do see potential. Whether that's to the long side or the short side, there is great potential here today. With Tesla, keep it on high watch, guys. All right? Now, do we have any questions regarding Tesla? The analysis, the gameplay, and the reasoning, how I came up with these levels. Any questions before we move on to the next three? You just made $3,000 on TPST? What? That is insane. Rayo, let me ask you a simple question. What brought your attention to TPST? Why did you get into TPST? Like, break it down for the team. Like, how did you make $3,000? Like, did you see it on the scanners? Did you see, like, hey, keep it on high watch for the dollar bounce? Like, what was the reasoning leading up to getting into that trade? What even brought it to your attention in the first place to be able to make $3,000 before a 9:30? That's insane. Give us the breakdown. Give us the rundown. I'm sure everybody's curious on how did you find the stock? What was your reasoning? Why did you get in? What was your plan? Right? I'm sure people are very curious right now. What was the bottom uptrend level on Tesla? So just go back to Monday's low of day, right? Go back to Monday's low of day. Come here into yesterday's low of day. And then extend your trend line out to the right. And you can see that right now, if we came straight down into the trend line, it would put you somewhere around 263.50. Somewhere around that point, 263.50, if we came down right here, right now. But if we come into it, say like 12 o'clock, it could be 264.80, right? There's a big difference in price. But just go connect your two valid points here on Tesla. Monday's low of day, yesterday's low of day. Extend the trend line out to the right, and if we hit it as a 0.3 today, that could be a nice area to get long, right, for the next leg on up. And the reason I like this as well is if we're grabbing the trade at the trend line, where do you put your stop losses? Below the trend line. So do you have a lot of risk on Tesla? No. Your stops are really nice and tight. Compare your risk with the upside. Wouldn't you guys say that that's a pretty high risk to reward ratio? Your risk could be literally $1 to make $5 to the upside. I think that's pretty good myself. So I love the low risk that comes with this trade. And we have so much upside potential into all of that daily resistance. And then from there, we start looking for a short opportunity. Again, same thing. Low risk. We're just putting stops over all of that resistance. And there's a lot of potential to the downside in the coming days and in the coming weeks. All right. What about Tesla earnings? We still have a week or so until we get Tesla earnings. Wednesday, October 18th. So, again, we have a week. So, do I think that earnings are going to necessarily impact this day trade opportunity off the trend line? No. Do I think that if we get reasoning to get short today or tomorrow and carry this through early next week, do I think that earnings coming up could kill this short? I don't necessarily think so. Right? Would I hold this through earnings? Probably not. Like I said, I want to get in off this level of resistance. If we set up, if there's a reason to get in, I want to get short. Day trade that can turn into a swing trade. It's a day trade opportunity that could turn into a swing trade. And so going back to what I said, entry today, taking half my profits minimum by the end of the day, right? Day trade, secure those day trade profits. And if I see fit and if I want to, I will hold half my position into tomorrow, into Friday, maybe into Monday, Tuesday. If we really see great downside, I'm taking profit, taking profit, taking profit. Eventually, if this plays out in my favor, right, I can get to a free position. I can have a couple of contracts that I own completely free if this is traded correctly, if it even works in the first place. And then from there, I can hold those free contracts through earnings and just see what happens. They're already free at that point in time. So it's a day trade opportunity where I'm looking to lock in these profits if we get the trade in the first place. That could turn into a swing trade if we see some follow through and some continued downside, okay? Now, I always like to say 30 to 45 days out on expiration. I always like to say 30 to 45 days out. Doesn't mean I'm holding it 30 to 45 days. Just means I want to buy myself time just in case I can get a couple free contracts. I can get a free position. And who knows? Maybe I want to hold them for 30 days. If the thing is dumping, well, I would probably still want to be in this next week and the week after. So I want to buy myself time just in case. But right now, I see potential to lock in some of these profits today and then more through the rest of this week, if it even sets up in the first place, right? It hasn't even set up yet, right? There's not even confirmation yet at this point in time. So we're speculating. But if it does come up to this level, if it does top out, if there is solid reason today to get in, I'm letting you guys know I'm jumping in. 110% I'll be getting in this trade. But there has to be a reason to get in. And right now there's no reason, right? Because we're not even there yet. We may not even get there. The trade may not even be validated. But if it is validated, you guys know my game plan, the reasoning, 30 to 45 days out, right? Taking some profits today, trimming the rest this week. We got earnings next Wednesday. Maybe by then I have a free position and a few contracts I own free and clear that I can hold through earnings to see if Tesla drops even lower and really get paid. But at least I've already paid myself. I'm profitable. I own those contracts free and clear based on that example. So again, we still have some time to wait basically. Like we got to get there in the first place on Tesla. I did say 45 days out. Yep, 30 to 45 days out on expiration. Seems like there's some confusion there. You're probably thinking, why would you go 30 to 45 days out on expiration when you're planning on closing it by the end of the week, right? Maybe you should dive into some of our options lessons here on YouTube and understand why I would want to even go 30 to 45 days out in the first place. Basically, I want to buy myself time, right? I want that theta to be low so I have less time decay. So I'm willing to pay a higher premium to buy myself time just in case I get to the point of a free position to hold through earnings if I want. But if not, I can still make money even going 30 to 45 days out. Even if I close the entire position today, I can still make a good return going 30 to 45 days out. All right. And if you guys are saying like, hey, make your chart big and your face small, just go to your settings icon on YouTube. Just go to this little settings gear, right? Change the quality. Change the quality manual. And if you're watching it, you can see the charts just fine. You can even zoom it. Look, you can see everything just fine, right? You can see the analysis. You can see everything. You're great. There's a reason why it's not all chart, but we're still here giving you guys the breakdown. But just, full screen it, change the quality. You can definitely see things very nice and very clear, right? So, questions on Tesla. Any questions on Tesla, guys? The reasoning, the analysis, the game plan, my expectations. Do we have any questions, guys? Yeah, I get that. You don't like the high premium, but with the high premium comes more protection. What are you doing? You're protecting yourself. Lower theta. You're buying yourself more time. And with options, time's always working against you, right? So sometimes you have to bite the bullet, pay a little bit more, go further out just for a little bit more protection. And I'm all about protecting myself, protecting my capital, and not being so strapped on time, right? And that's the one thing with options is you're strapped on time. Eventually, that option is going to expire worthless. If you get into that trade on a Friday expiration, right, and it takes until next week to make its move, you're screwed. You're not going to realize the profit you could realize. So for me, I'm going to pay a little bit more on the premium, go a little bit further out, buy myself a little bit more time, and give myself more time protection on those options. All right, something else that we were talking about last week that I want to talk about again today, Netflix ahead of earnings. I'm still interested in the calls ahead of earnings. Next Wednesday, we have earnings. We are grinding the 200 SMA beautifully. We are grinding this zone of daily support as well beautifully. And so I kind of want to get an entry on Netflix today and ride it into next week. Same kind of analysis as Tesla. I see an opportunity to get long on Netflix off this great support. I'll explain it in a little bit more detail here in a moment. But basically, secure as much profit as I can into the end of this week and get myself to a free position and see if I can hold some of this through earnings. And I'll have a couple things working with me on Netflix. What we know over the next few days until Netflix earnings drop is the implied volatility is slowly going to increase, which will benefit me if the trade goes in my favor. Not only will the trade go in my favor, not only will I capitalize on the delta, increasing my premium for every dollar the stock goes up, but now the implied volatility is increasing ahead of earnings, getting to its highest level that it will be ahead of earnings. So now I have the IV inflation assisting me as well, right? And so here's the cool thing to the downside. Let's say it starts working against me. Well, of course, I'm going to lose money for every dollar that Netflix goes down. But meanwhile, the implied volatility is still increasing on both sides, calls and puts. So that will protect me to a certain extent to the downside. It will help me limit some losses because I do have the offset of the increasing implied volatility if it goes against me. So I do want to be getting into Netflix, not just because we have earnings, not just because the implied volatility increased. Those are things that are beneficial, but I love the technicals. And I've been watching Netflix for a month to come down to that 200 SMA, to come down into all of this prior daily resistance and see if we can hold a support. Well, would you look at that? Over the past 2 weeks, we've been holding both the 200 SMA and that daily zone of prior resistance that we can clearly see is turning into support. And then what are you starting to see? Great price action on Netflix. You come on down to that zone, you bounce. You come down to the 200 SMA, you drop below it, but you bounce instantaneously, right? So you have a low, a lower low, but a snap back above those two support levels. And what are you starting to see? A pullback into that zone, a pullback into the 200 SMA. Right around the same low that we put in here on September 28th. So we have that low here. We have that zone of support. We have the 200 SMA. If we can hold this zone, that would give us a slightly higher low that we could push off of. The technicals look great, right? There is great potential to the long side ahead of earnings. And like I explained as well, we do have the implied volatility working with us. If we're on the right side of the trade, fantastic. We should realize a little bit more profits because the inflated premium due to the IV rising. Same thing to the downside, right? It should limit our losses to a certain extent because you still have the implied volatility rising, inflating those premiums, right? Even though we're experiencing some downside, we shouldn't experience, as much risk as you normally would think, okay? So there's a couple benefits about Netflix ahead of earnings, but the technicals are really, really nice. And I've been watching Netflix and waiting for Netflix for literally, since right here. Back in September, you're talking almost a month. I've been just patiently waiting for Netflix to come down to this level and set up. And right now, it's starting to set up off 3 key levels. The daily zone of support, the 200 SMA, and then this low right here. And why is that low significant, right? Because that would give us a potential left shoulder, head, right shoulder, right? All at the same price. 200 SMA, daily zone of support, and that low prior to getting that lower low. And if we see a higher low form at that initial low, at the 200 SMA, at the zone of support, that's a very, very high probability area to get long, right? With low risk and pretty damn good reward. I think we could see maybe back up towards around the high 390s ahead of earnings. Netflix is a big mover, right? Within 2 days, we've seen the stock jump nearly 20 points. So in the next 5 days, could we see Netflix pop 20, 30 points? Yeah, absolutely. I'm thinking what's super realistic on Netflix is to make its way up near 400 in the 390s. And I know if I get in somewhere around this zone of support, I know my stops go under the swing low. My stops are nice and tight. I have really good realistic upside leading up to earnings. Netflix is a volatile stock that can move and will move 10 points in a day. Right? And we see that we could potentially have a nice little 5-to-1 opportunity here on Netflix. And same thing, go 30 to 45 days out, right? Take most of my profits today through the rest of this week, get to a free position. And if I can get to a free position and have 1 or 2 contracts completely free to where they could go to 0 and I still make money on the trade, why not hold something through earnings? Maybe earnings are good. Maybe we see it up at 420. Who knows? But the goal, day trade opportunity, scale out tomorrow. Scale out, Friday, scale out, assuming it goes in our favor, assuming we're even in the first place. Get to a free position. If I want to hold through earnings, I can. If not, I close the position ahead of earnings next Wednesday. So we got some decent opportunity here on Netflix. Definitely going to be keeping this one on watch. Amazon, watching this for a possible daily gap fill today. Apple, watching this for a possible daily gap fill today as well. Okay. We only got about 4 minutes until market opens, 5 minutes to market opens. I don't have enough time to go through Apple and Amazon. Plus, they're on the lower part of the watch list. So we'll talk about these inside of chat today if they even set up. But Amazon, possible gap fill up to 135.20. So definitely want to keep this one on watch. Looks really good today. And Apple, it's kind of 50-50. Maybe it sets up today, maybe it doesn't. It's at the very bottom of the watch list. But Amazon looks really nice. Obviously, Netflix for the day trade that can turn into a swing trade looks pretty good. And then Tesla. I'm liking Tesla at the start of the day, guys. And then obviously the SPY looking beautiful as well. Beautiful as well. So that is the game plan for the day. That is my analysis. That's how I'm looking to come into this market. These are the best opportunities that I see. This is how I'm going to come in and look to make money. Okay, the SPY, the Qs, Tesla, Netflix, and Amazon. 5 quality setups, 5 amazing opportunities, and 5 detailed game plans that'll allow you to come in and strategically get involved. As long as you do your due diligence, as long as you build your plans, you have my plan that you can base your plan off of and come in and trade some great setups that have high probabilities of actually working in your favor, guys. All right, so it's 9:25. Do we have any final questions before we start our trading session, ladies and gentlemen? Today's going to be a great day. I feel it. I smell it. It's in the air. We are going to rock and roll. We are going to crush this market, and we're going to smack this market's you know what. In a good way. Felicia, what's up? Good morning. Ding dong, Mr. Mutz. You got LA in the house. What's up? Good morning. Who's LA, by the way? LA. Are you from the LA? Are those your initials, LA? I'm a little confused. Who is you? Who is jumping in this this private Zoom this morning? What's up, Matt? Good morning, dude. We'll get Anthony in here in a second. Zach, Corey, pop on in. Stir, pop on in. We'll start jamming. We'll have some fun, guys. We've got about 3 minutes until market open, guys. Let's get those scanners up, loaded. We are all set, ready to rock and roll for today. Futures accounts open. Main accounts open. IRAs open. We are going to rock and roll, baby. There we go. Mr. Anthony coming on in. What's up, dude? Finally, here comes some energy. I can't wait. Just wait for it, guys. This is what I've been waiting for all morning. That's what I'm freaking talking about. Love the energy, man. Good freaking morning. How you feeling today, boss? You feel great. You feel freaking phenomenal. A+++, man. You're on top of it today. Hell yeah, man. You had one of your biggest single days yesterday in the market. You did, man. I'm sure that feels really freaking good. Good. So you walked away with 360 on the day, right? Yeah. It's good stuff, man. So let me ask you this. You're all about goals and intentions, right? So what are your goals and intentions for today coming into the market in the next 2 minutes? I love it, man. I love it. Just basically to sum it up for everybody, just replicate exactly what you did yesterday. Yesterday, you abided by your rules. You waited for the market to come to you. You built your plans. You got positioned correctly. And by doing those things, that's why you saw a good green day. So again, we're just going to replicate what we did yesterday. Follow those rules. Wait for the best trades. Keep your losses nice and small, and let's rinse and repeat, baby. And hold on to those winners. I love it, dude. So market will be here in about 2 minutes. Final questions before we start the day. Let's go. If not, then continue to do it. Just take your naps, guys. Seems like everybody's napping this morning. So just keep taking your naps. We'll have fun. We'll rock and roll. We'll be dropping some value bombs, and we'll be looking for great opportunities to lock in some profits while you guys are taking your naps. For what? I thought he was going to say the clown was really scary, so I called the cops on you. Does he really? And you hit it on the head. You're a drunken neighbor, so he's always intoxicated when he does it. I think that's his problem. I don't think it's the clown. I think it's the alcohol. All right, everybody on YouTube, peace out. Have a good one. Take care. Stay blessed. Have a great trading session today, and we'll see you back here tomorrow morning on YouTube for the pre-market rundown to 8:30. Take care. Peace out, and I'll see you guys tomorrow.